Hello, fellow investors. First, I'd like to apologize for being late on this video. I have been cruising the seas on the Carnival Liberty. Had a wonderful time. For those of you, I used to have a private yacht. I sold it. For those of you who have private yachts, sell them. Oh my God. Not only did we have a captain, we had 7 backup captains. And people to wash your clothes, and people to cook your food, and and you know what trouble boats are. The bigger they are, the more trouble they are, the more worry. Just sail around for 50 or 100 bucks a day. You can't put gas in your boat for that. Anyway, I've been telling you about the bull. This is the bull. He sits in my window, and just kind of the light hits him. He's made out of quartz crystal, and he was a gift from Philis Smith, Julie's mom. Thank you, Philis. He's kind of like the Merrill Lynch bull, and I just really like him, so I appreciate it. And I am, as you know, always the optimist and always the bull. And you can get plenty of bull here. Anyway, you know, I was thinking about this market and trying to decide. People talk about fundamentals. People are talking about the technical aspects of the market. Did the fundamentalists tell you that the market was going to crash a year ago? That we were heading for? I think maybe there are 1 or 2 people predicting doom and gloom, but by and large, no. Technical analysts didn't either. As a matter of fact, the market, you know, the only rule in the market is the market will do whatever it has to do to prove the most people wrong. That really is a hard and fast rule. You can always count on that. It scares me when everybody's too positive in one direction or the other. But at any rate, I was trying to think of what I am. Fundamentals are a factor, and technical analysis is a factor. I look at both, but I never put them above what I consider to be the most important element in the market, which is the psychology of the market. Fear, greed, psychological factors. And the market moves more on psychology than anything else. If people have the idea that something's going to go up, they buy it. It's more or less a self-fulfilling prophecy. I remember the Tylonol scare back in the 70s. I bought some Tylonol, puts on Tylonol, because, you know, somebody had laced Tylonol with cyanide, and they were killing. That's going to destroy the company for sure. So buy puts. The stock's going to go away. Stock went up. How is that possible? Basically, it was in play. Everybody was thinking about it, and it literally drove the market up, or drove the stock up instead of down. So it taught me something. But what is driving this market? A lot of people say it's government stimulus. I'm not so sure. I think it's more perception. Now today we just hit a new, today is the 12th of October. We hit new highs in the market. And that's good, but those highs are going to feed into themselves and get even better. I met a gentleman last night at Ale House in Tallahassee. He was up here to see his friend. He was from Vista Construction down in Altamont Springs, very, very near Orlando. You might as well say Orlando. I like the area myself. Lived in near that area back when I was growing up. But Altamont Springs is a very beautiful area. Tom, what's Tom's last name? Maybe I shouldn't even say it. But anyway, Tom is Vista Construction, and he does commercial construction. Very nice man. It was a pleasure to meet you, Tom. One of the questions he asked me, he says, when do you think the market will hit 10,000? I said, this week. And 11,000 by the end of the year. Now, you know, I'm an optimist, so, you know, factor that in when you're making your decisions, because sometimes maybe I've got my rose-colored glasses on. Today, I have this tie on. I don't know how well you can see it, but it's a deck of cards. It's all the different cards in the playing deck. I told you I was known back in the healthcare days for some of my crazy ties. This was one of them. But I wore it today to remind you that this whole thing is a gamble. All of it's gamble. But life itself is a gamble also. But I think it's the perception that drives the market. So what you can probably classify me as is a psychoanalyst. I look at the fundamental factors, I look at the technical factors, I see what's going on, and then I pretty much make decisions based on psychology. What people perceive and what people think, because that's where we're really going. I'm going to mention a couple year-end stocks to you. Foreign trades. They're Morgan Stanley funds. One is APF, Asian Pacific Fund, and the other one is Latin American Development Fund, LDF. I think I wrote down LDG here, but it's LDF. And those do their big whack at the end of the year. So it means you probably need to get into those sometime end of October, early November. If you're worried about an October pullback, and you probably should be. October is a good whack month to remind us all that nobody really knows what's going on. But it's a whack month, and so you probably should. You might want to wait till early November, but get in before the ex-dividend date so you can get those big year-end dividends that those guys pay. I think they're going to do very well this year too. This is earnings week. Bank of America, Citigroup, Goldman Sachs, J.P. Morgan, Intel, IBM, all reporting earnings this week. The financials are where I really want to stress to you that I think, good companies, I've told my sons for years that good companies manage to spend their profits. Walmart, for instance, makes money, and what do they do with their money? They give it to their investors, of course. In a pig's eye. They build more Walmarts. They increase the size of their corporation so they don't have to pay taxes on that income, and they don't have to give it away to their investors. But I think that Bank of America and most of these financial companies, another one I hold is BlackRock. I think that's been really good to me. I think that they're not going to be able to hide their profits. For one, they're under a lot of scrutiny. So they'll try to do it, but I don't think they'll be able to do it. So you're going to see some of this stuff that they've done in the last year, acquiring other companies and what have you, of which there'll be more of. Those will be, so they'll show big earnings, and I think that's going to drive the stocks even further up. Like I said, I think Bank of America is going to 40, split, and go back to 40 again. I think the dividend at the present time is 0.02%. Thank you, Ken Lewis. And by the way, I talked to your attorneys, what was it, about a year ago? And, now the reverse is true. So at any rate, let's see, what else was I going to talk to you about? Sprint. I told you about Sprint. I sent out an email yesterday. Sprint is now getting noticed by Motley Fool and some other, not rating agencies, but reporting agencies, and they're saying, hey, and Sprint is up. So I bought it at $3.60 a couple days ago. Last Friday, I think it was. So, and it went down to $3.58. You could have gotten it cheaper. Nobody buys, nobody gets in at the bottom, and nobody gets out at the top. But a profit is a profit is a profit. My sale target on that is around 740 to 760. Yes, more than double. I think that Sprint's going to get hot. I think they're going to get back in this sell game. They've got Boost Mobile. They've got some other things. I think that that's going to come into play. So the Dow at 10,000 by the end of this week. The Dow at 11,000 by the end of this year. So remember the only rule that applies. The market will do whatever it has to do to prove the most people wrong. And now, back to you.